The reason why I am a swing and position trader nowadays is because of account size. Like, day trading is great if you have an account that's it's a small account, say less than 1 million or less than a couple of million. That's a great way to trade, to day trade. And it's the fastest way to learn trading and growing your account because you do a lot of trades. But once you get to over 1 million or 2 million, it just can't scale that. It's so hard. You have to find other ways of making money. That's why I swing and position trade. Yeah, now this vibe, these things are toxic. Like, I bet they have toxic financing. And now someone is pumping this. And sometimes they can go, if you're in early, they can go up a lot, like several 100% intraday. But a lot of times this is what happens. They just, they run and then it just tank. They have toxic financing and they're selling paper into all of these crazy people buying these things. And now it took out the intraday lows. No, so everyone's bought after the open are down on it today. So you gotta be really fast. And you can't trade this thing with a big account. I can't buy 50k shares of this thing. I just can't. Are you primarily looking for flag breakouts in these beaten down names? Yeah, flags, that's the flag breakouts is the type of setup that's been working best for me. That's where I made, I think, most of my money over my trading career. I've been trading for 8 years, and flags, flags, they work on all time frames. You can trade flags of the daily chart, which I'm doing now because I'm a swing and position trader. But if you're an intraday trader, you can trade like intraday flags. Let's take something like ENDP, for example. Like, this thing is up. Well, it's too early in the day, but if you have something like, let's say this EN, it's up 17% on the day. Let's say it goes sideways for a few hours and builds up, maybe pulls back a little bit, goes sideways, starts building higher lows intraday. That's something you could trade for a late day move with a set risk. Let's say you're gonna risk, I don't know, 10 cents to make 30 or 40 cents. Well, actually you do have a small flag here near the open. Like, it had a big pop, went sideways for 5-10 minutes, and then it had another leg up. Like, this is something you can definitely trade. You just have to define your time frame. It's all about defining your time frame. Since I have a longer time horizon, I don't look at intraday flags. I just don't care. I look at the daily charts and also the weekly charts. Right now I'm streaming my TC2000 off one screen, but I usually have it on 2 screens so I can see the charts are larger, and I also look at the weekly chart for everything. But just for streaming purposes, I've scaled it down to 1 screen. My position sizing is I try to be no more than 1% of the average daily volume. So if I have to buy and sell the same day, I don't want to be more than 2% of the daily volume, the average daily volume. So the average for this thing has been, about 100,000 shares per day for the past few months. So 1% of that's 100,000 shares. Or sorry, 10 million shares, and 1% of that is 100,000 shares. The cleaner the chart, the better. The cleaner, the better. You don't want sharp. This is like, if you look at this AA versus 10, like, they're kind of similar charts, but you can see this 10 is it's a cleaner chart. Just look at the flag. It's just much cleaner. And now we have a defined breakout. Like AA, this is, I don't know, it looks choppy, but you have to train your eyes to that. I've been doing this for 8 years. I've been looking at maybe 1,000 charts daily for 8 years. You kind of get a feel for it, for what's clean and what's choppy. And this JCPenney also looks very clean defined moves. Like, this is the worst kind of market where the indices are kind of strong, like they're near all-time highs, or like they are now, like SPY and Russell. Oh no, Russell not so much, but Nasdaq, they look great. Like, they're very strong. They're not tanking or anything, but under the hood you have stocks are really weak, and the breakouts are really fragile. So I've always had trouble in these kinds of markets. Finding something like this that goes up like 500 or 1,000% over a few weeks, that's also something I've nailed a couple of times per year over the past 3-4 years. But just crazy selling. They're just selling so much paper into this. All these crazy day traders. I know a lot of day trading rooms are looking at these lower priced, liquid, reverse split stocks, and they all buy, you know, once they get a little bit of volume or some PR, they all buy into this, create these spikes, and then the holders of the toxic paper, they sell into it every single time. Just so stupid. I used to be like that too. I bought these stocks, you know, because they like lottery tickets. 9 out of 10 times they fail, and the 10th time it's gonna make a big move. You look at closely at the SPY, the index failed right on top of the rising 20-day moving average, and also the 10-day has started declining. I don't know, maybe I'm making things up here, but these things matter until they don't. Question: apart for high ADR, what are you looking for in bottoming beaten down stocks for high risk reward potential? Range, like not only ADR, but you want big range. You want things that are down like 80-90% over the past 6 months or a year. Like this 10 is down a lot, and you know you want clean charts. Like let's look at this AA. Like it's not clean in the same way. It's kind of choppy. There's no clean defined moves. Like this 10, you get cleaner moves. Like look at this past run. Look at how clean it was. Let's see the weekly chart. Nah, I can't really see it, but you just take a sometimes you just take a shot. Like it's kind of hard to explain what I see. A lot of this experience based. Like I have a huge database of charts in Evernote, like literally tens of thousands of charts and stocks, and I've annotated them with news and earnings and stuff like that. You know, this is a project I've been working on for 6 years. I'm still not done. I'm constantly updating it. I have thousands of stocks, and you know, the 80s and forward. And I even have charts of stocks from the 20s and 30s and 60s, etc. It's the same patterns repeating. And if you can get good news or any kind of news, like let's say you have some bad news and the stock is not going down or even starts going up, that's also a good sign. How much is fundamental in finding the good setups, would you say? Ooh, they're not necessary. Like for example, something like Mallinckrodt, which I was long like a month ago, and I got stopped out today. Well, I bought it and got stopped out today. Like I wouldn't be surprised if this thing goes bankrupt in a few months, just like Purdue Pharma did. They have a huge debt load. This company has a huge debt load, and the fundamentals are really shitty. But the thing is, it's so beaten down. Like if it would double from here to 5, it would be where it was back a couple of months ago. And you know, it could be anything that can trigger a rally like that. A lot of this short covering, like people that started short, or funds, not people. This is not retail stock. I don't think a lot of retail is shorting it. Sometimes good news can be bad news, and bad news can be good news. A couple of months ago, when there was I think it was a Bloomberg article that said that they hired a restructuring firm. Now that's obviously bad news. That means when a company hires a restructuring firm, that's like they're in trouble. Like they're officially saying they're in trouble, even though they're saying everything is fine. To the investors, things are not fine. And that triggered a huge rally when it doubled. But it could have released some kind of news, like, oh look, we got some kind of an approval, and that wouldn't have moved the stock, because you know, I know. Look, I don't know. It's just, it depends a lot. I would say news and fundamentals are great, but like 95% of my trading is still price action. Like it doesn't really matter if the fundamentals and news are great or bad. It's all about price action. It can be kind of confusing because the markets don't make sense ever. Even though a lot of people, they try to make sense of the markets, but they don't. You just have to get used to that sometimes good news is bad news and bad news is good news if you are a trader. Let's see, how much is fundamental in finding the good setups? Or the question is finding the good setups. Like I scan for stocks and they're all based on price action. Like I scan and it doesn't really matter what the fundamentals are, at least for finding the stocks. Now trading is another thing. Like if you look at, these are my scans. They're all like 5-day gainers. This 5-day loser scan, I don't really look at this one very often. Biggest 1.5 year gainers, biggest 1 month gainers. Like I look for strong stocks. Everything is pretty much based on flags. And those stocks, they may or may have good news or bad news, or good fundamentals or bad fundamentals. So 95% is price action, everything else is irrelevant. Because if it holds this 12 area and let's say it starts breaking out again at in 2, 3, 5 days from now, I'll buy it back, because the chart looks great, and I'll risk 50 cents to potentially make $3 to $5 or something. That's a trade I'm willing to do any day. But this is very different from day trading, because in day trading you're trying to get a high win rate. Like your win rate should probably be higher than 50%, but your risk reward is smaller. It's maybe 2-3 times your initial risk. It's very hard to get 10 times your initial risk. A trade that makes you 10 times the money, or 10 times your risk on an intraday trade. But in swing and position trading, that's what I'm aiming for in like every trade. I try to get 5-10 times potential reward over the risk on every single trade. But my win rate is very low. My win rate is maybe, I don't know, 30%. So it's a different kind of trading. So day trading, you're trying to make a lot of trades, lower risk reward, but you compensate that by doing more trades. But in swing and position trading, you do fewer trades, definitely. Instead of making, I don't know, 10 trades per day, maybe make 10 trades per week or something. I don't know. It also depends. But I just wish this market to either like break out and make a big run, or just break down and do something like it did fourth quarter last year, just tank. Because as I said, like when the indices look kinda good and there's still a decent amount of stocks that are holding up and having good breakouts, but they all fail. It's, for me personally, that's the hardest type of market to trade. Like a market like this, which just goes down every day, that's not a hard market to trade. I just don't trade. It's very easy. That's the easiest market. I don't do much. I maybe trade some of these volatility ETFs like UVXY. Like I do trade those, VXX, VIX, all of those. But individual stocks, I don't trade them much at all. Well, I don't really I buy them as they break out. Like I don't care if the breakout is in the morning or in the afternoon or midday or something like that. It doesn't matter to me. For me, it's important that the market is good, that the setup is solid, and that there is preferably volume. Like and usually you get volume when there's news. Like when I say volume, I mean above average volume. This is what I was talking about this Mallinckrodt. When I saw this candle forming, like the volume wasn't that big compared to when it had a run like a month ago. Look at the volume, it was much higher. So on this candle, the volume was kind of low. So that's when I said I'm not going to add to it, because the volume is not really confirming the move. So yeah, the time frame doesn't matter as long as the stock is not up a lot on the day. Like I'm not gonna buy, like let's say like now I bought it when I bought it 255, but I also have another indicator custom made that I made that shows the average true range. So the difference between average daily range, average true range is, I think the average true range shows the intraday, the average intraday move. Like it doesn't include gaps. Average daily range includes gaps, but average true range doesn't, and the average true range is in cents. So this is 51 cents. So the average true range for Mallinckrodt is 51 cents. So I usually have a rule that when a stock is up more than its average true range, now there's always exceptions to this rule, but 95% of the time I don't buy a stock even though it looks good, but if it's up more than its average 2 range. So yesterday's close was 241. So the highest I would have bought this stock would have been 292. So 241 plus 51 cents. That's 292. So that's the highest I would have bought this stock. So if the opening range highs would have been, let's see if it had gapped up more. Let's say it would have gapped up to 280. Right now it gapped up to like 255, 253. But if it had gapped up to say 280, you know, gone sideways a little bit and then broke the opening range highs at like 295 or something, I probably wouldn't have bought it. So it doesn't matter, the time of the day doesn't matter as much as a volume and how much it's already up on the day. You always want like when it's obvious that the volume for the day is high above average, that's a good sign. Usually I find that those kinds of breakouts work better because it's just not some random move that has a high fail rate. There's usually some kind of news involved, and usually there's also a gap up involved. Like some of my better trades this year have been on earnings gaps, like Roku back in May. I bought it here. I also added here. These were both earnings gap. Look at the volume. This thing was very obvious, very early, already in pre-market, that the volume was gonna be high above average. Same thing here. I also have EMPH, another earnings gapper. I'm still in it, as I talked about like an hour ago. Had high volume and it had earnings. There's been a few others, like Mealy. This one I think I bought it on this day, but for some reason I sold it. I think I got stopped. I think I bought it intraday and I got opening range breakout, but then it kind of dipped below the opening range breakout and then it went. So this is a trade that went up, you know, over 70% over the next few quarters, but I got stopped out. I never bought in again. But this is another example of earnings gapper, you know, had a long sideways move. Like earnings gappers, that's pretty much mine. If I only had to trade one setup, it would be it. Like stocks that gap up on surprisingly good earnings with high volume. Do you buy right at the open? I usually look at the open at the 1 and 5 minute charts. Sometimes I even buy like a pre-market if it's that liquid enough, because sometimes these stocks are very liquid pre-market, like they're trading like they're like intraday, like the stock would, like the market is open, and that's what you want to see on the best earnings breakouts. But if I don't buy pre-market, or if I buy pre-market, I want to add to it, I usually look at the 1 and 5 minute charts. I may buy some on the 1 minute candle. Like I let the first minute candle form, and as soon as it breaks that, I buy, and I put a stop below that candle, like the lows of the day, or the 5 minute, and or I do both. And then if I want to add to it even more, I wait for the 5 minute candle to form, and then I might buy it or even add to it. So that's I like opening range breakouts. That's a big deal, and you can define them in many ways. You can use like any kind of time frame. You can use the 30-minute chart, the 60-minute chart, or 5-minute chart. So you kind of have to experiment with that. I fat finger all the time. Not every day, but definitely every week. Like I oversell or overbuy, or I put a stop on the wrong level, or like it happens all the time. If you're a swing or position trader, you don't have to look at things all the day. You don't. One of the big advantages with swing and position trading is you're not near your entry most of the time. Like even though like this EMPH is about to stop me out, my entry is here. Like I don't really care what it does here, right? I'm just, following. I'm just, trailing my stop. But if you're an intraday trader, let's look at the intraday stop. I mean, whatever. This is just a illustration. Let's say your entry may be here, right? And your stop may be here. So you're always very close to your entry or to your stop.